Welcome to the Nifty Noon Podcast. We're thrilled you've joined us for another deep dive. This is where we unpack complex topics and really pull out the most important nuggets of knowledge and insight from stacks of sources you share with us. Today we're taking I think, a fascinating journey through the world of crypto and traditional finance. We'll be focusing on some really significant developments from just the past week, sourced directly from Nifty Noon's daily updates. Our mission really is to give you a shortcut to being exceptionally well-informed about the biggest shifts in digital assets, and hopefully do it with a blend of surprising facts and insights that, keep you hooked.
Absolutely. And we've definitely seen a rapid acceleration, particularly in institutional adoption and some really innovative breakthroughs in the crypto space lately. It's a very dynamic period. The lines between traditional finance and decentralized assets, they're really blurring. And we'll be exploring what that actually means for the market and for you.
Okay, so let's unpack this. We'll start with the oldest news from our stack, work our way forward chronologically. It gives you a good sense of how quickly things are actually moving. And as we go, we'll talk about these stories in sort of we and us terms and mention our newsletter when we're looking back at that Nifty Noon content. Ready to dive in?
Let's do it.
All right, so kicking things off, July 28th. This was a huge story from our newsletter. Galaxy Digital. They facilitated what sounds like an absolutely historic sale. We're talking over 80,000 Bitcoin, valued at over $9 billion at current market prices for a Satoshi-era investor.
Yeah, and not just any sale. It was specifically for estate planning, which makes it one of the largest notional Bitcoin sales ever recorded. But what's really fascinating here is how the market just absorbed it. I mean, they sell off that size. Historically, that would cause serious waves, even in traditional markets. Right. But the crypto market showed, frankly, incredible resilience. And it wasn't just luck. If you look at the Nifty Noon updates around then, the evidence for demand was there. Companies raised nearly $86 billion this year just to buy Bitcoin and other crypto.
$86 billion. Wow.
Yeah. And you see specifics like the iShares Ethereum ETF becoming number 2 in inflows for the week. Out of 4,300 ETFs.
That's huge.
BlackRock bought $440 million in ETH that day alone. Public companies hold nearly 900,000 Bitcoin, now up 35% in just one quarter. So this resilience, seeing this massive early holder sell-off get absorbed, it does raise a big question, doesn't it? Mm-hmm. Is this, a sign the market's finally maturing? Or does it hint at something else, like a fundamental shift in who's really controlling the network? From those early individuals to, big institutions.
That's a really critical point, because if control is shifting, what does that mean for, the little guy? Or for that original cypherpunk vision of crypto? Our newsletter on the same day also pointed out Kathy Wood's ARK Invest. And they put $116 million into BitMine, an ETH treasury firm.
Right.
But then they sold $12 million of Coinbase stock and $1.1 million of Robinhood. Interesting move.
It is. And you had Sailor's MicroStrategy raising almost $2.5 billion with that new STRC security.
Yeah.
It really shows where the big money is flowing and how fast these investment strategies are adapting.
And just as a reality check, our newsletter also mentioned over 913,000 ETH, worth $3.4 billion reported lost around then due to user error.
Oof.
So, yeah, a stark reminder that even if things mature, you still got to be careful with your assets.
Absolutely. Self-custody has its risks.
Okay, so moving to the next day, July 29th. The pace doesn't slow down. Our newsletter covered PayPal making this, monumental move, basically on-ramping the world with their PYUSD stablecoin.
Yeah, this pay with crypto feature for U.S. merchants, it's a genuine game changer. Businesses can now accept payments in over 100 cryptos. Bitcoin, Ethereum, even meme coins.
Meme coins, really? Wow.
Seems like it. And the genius part is the seamless conversion. Crypto comes in, instantly converts to PYUSD or US dollars. So the merchant is totally shielded from volatility, gets near instant settlement.
And the fee?
Super low, just 0.99% initially. That's a massive discount compared to standard credit cards.
Huge.
So if you connect this to the bigger picture, PayPal's move isn't just about payments. It's really legitimizing crypto as a way to transact for potentially millions of businesses.
Yeah.
It could bring in so many new users who were maybe on the fence before.
Right. And Nifty Noon's updates that day showed other things happening, too, like SharpLink Gaming's ETH holdings jumping to $1.67 billion.
They bought another $295 million overnight.
And Ray Dalio suggesting 15% in gold or Bitcoin as a hedge. That gets attention.
Definitely. And then PayPal throws in a 4% yield on PYUSD balances merchants hold.
Oh, interesting.
So it's not just a payment method, it's actually creating a direct financial incentive for businesses to hold and use it. It accrues value.
This is where it gets really interesting in like a practical sense. Think about small businesses doing international commerce. This could just slash their fees and speed things up dramatically.
Totally.
Or even how you think about loyalty points. Imagine converting them into a stablecoin that actually earns you 4% yield.
Exactly. It brings crypto into the everyday, doesn't it? It's not just theory anymore.
It really could change how you buy and sell online and definitely how businesses manage their cash flow.
Big shift.
Okay, let's keep moving. July 30th, our newsletter detailed how Linea, the Layer 2 network, is getting really ETH-pilled, as they say, native yield and ETH burn mechanism. Big stuff.
Yeah, Linea, that's the L2 from Consensus. They announced some pretty significant upgrades right before their Linea token launch. And the goal seems to be deep alignment with Ethereum itself, both economically and technically.
So what does that mean practically? Native staking.
Right. By October, they plan to let you stake ETH that you've bridged over. So you earn yield, but your capital is still usable on Linea on the L2.
Okay, that's useful.
But here's the really groundbreaking bit. They're going to be the first L2 to burn ETH at the protocol level.
Burn ETH? How?
They're committing 20% of their net transaction fees to just burn ETH, reduce the overall supply, and the other 80% of the fees, they'll use that to burn their own Linea tokens. So it creates this deflationary pressure tied directly to how much the network is used.
That feels like a game changer for L2s.
It really is. It shows they can actively support the mainnet, not just kind of leech off its security. This combo of native yield and token burns, it's a powerful incentive for both users and developers. It really reinforces the value of the whole Ethereum ecosystem.
So, yeah, we're definitely seeing a shift, aren't we? L2s aren't just for scaling anymore. They're becoming these integral value-adding parts of the network. Lindy's kind of setting a new standard there.
Absolutely. It's an evolution.
And on that same day, Nifty Noon also reported the SEC granting accelerated approval for those rule changes. The 19B4s.
Yep, from NASDAQ, CBOE, NYSE. That's huge.
What does that actually do?
It basically approves the plumbing, the mechanism for in-kind creations and redemptions for both Bitcoin and Ethereum ETFs.
Oh, okay. So it makes it much easier for big institutions to get involved with the ETFs.
Exactly. Smooths the path for capital flow.
Got it.
And we also saw Bitcoin absorbing another big sell-off, $9.6 billion over that weekend. Mostly OTC desk stuff, private sales.
Still resilient.
Yep. But interestingly, the Ethereum validator exit queue hit its highest level in over a year. Over $1.9 billion worth of ETH lining up to leave staking.
Huh. Why would that be? People taking profits.
Could be profit-taking.
Yep.
Or maybe redeploying that capital into new things, like potentially Linea's native yield when it launches.
Could be.
It's hard to say for sure, but it shows how dynamic capital movement is in this space,
Right.
Always shifting.
Definitely. Okay, brings us to the final day in our wrap-up, July 31st. And this one, wow. According to our newsletter, this feels like maybe the biggest news of the week. Landmark stuff. JPMorgan Chase partnering with Coinbase. Letting 80 million customers easily buy crypto, use credit cards, and get this convert Chase reward points directly into USDC.
Yeah, this is massive. America's biggest bank, JPMorgan Chase, officially teaming up with Coinbase. It's rolling out in phases. This fall, Chase customers can use their credit cards to fund Coinbase accounts.
Okay, simple enough start.
But then in 2026, they're planning direct bank-to-wallet connections. That's a bigger integration.
Right.
And the really groundbreaking feature is that Chase Ultimate Rewards points conversion
Yeah.
directly into USDC on base, Coinbase's L2.
First time a major U.S. rewards program has done that, right? A direct path to crypto.
First time ever. It's a clear signal, isn't it? Crypto's presence in the global financial landscape is just undeniable now. Think about JPMorgan. Their leadership used to be pretty skeptical now. Full integration, even converting reward points.
It's quite the turnaround.
It's not just about convenience, it's about legitimizing digital assets for the masses. It really bridges that gap between TradFi and the crypto economy.
Absolutely.
Yeah.
This feels like a seismic shift for mainstream accessibility.
Yeah.
And it makes you wonder, for the average person who's maybe been crypto curious, does turning your credit card points into digital dollars fundamentally change how you think about value itself, beyond just, regular money?
That's a great question. It could.
It just means the on-ramps are getting smoother, the really big players are jumping in with both feet, and the whole world of digital assets is just becoming way more accessible than ever before. We've covered a ton of ground this week.
We really have. And what we've seen, especially pulling from the insights in our newsletter this past week, is this incredibly clear, accelerating trend. It's the undeniable integration of crypto into traditional finance. It's happening fast. You go from a Satoshi-era whale selling billions without crashing the market to PayPal making crypto payments easy for businesses, Linea innovating L2s with burns and yield, and now JPM and Coinbase opening the floodgates to 80 million people. The landscape is shifting at really an unprecedented pace.
It truly is. This deep dive really shows crypto isn't just some fringe hobby anymore, is it? It's becoming a fundamental piece of the global financial system. It's reshaping how we think about money, how we think about assets, even our airline miles or credit card points.
Exactly.
So for you, the listener, what this means is, yeah, more opportunities, easier access, but also you really need to stay informed about what these big integrations actually imply down the road. This rapid evolution, it kind of pushes you to think, are we watching the final stages now?
Yeah.
You know, crypto moving from niche tech to just essential global infrastructure.
It's definitely pointing that way.
Well, that brings us to the end of another, I think, fascinating deep dive. We really hope you found this breakdown of the week's most impactful crypto and finance news insightful, maybe a little engaging.
Yeah. Thank you so much for joining us and letting us guide you through this material. Your curiosity is really what drives these deep dives.
Absolutely. And if you want to keep up with the latest daily crypto updates, the kind of incredibly well-researched stuff we covered today, make sure you subscribe to the Nifty Noon Substack newsletter. You can also follow their X profile for real-time news and insights as they happen. We'll be back soon with another deep dive.